Hi and welcome to Ready Boss TV. I'm your host today. My name is T King. If this is your first time on the channel, thanks for being here. Let's get right into it. Today we're going to start a new series. This series is going to talk about ways to leverage traditional banking instruments to make money, basically to make money. These instruments are usually used as passive income tools. But today we're going to speak on how you can leverage on these instruments and make them kind of like a mainstream income um, 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 investment. So the first one we're going to talk about is the guaranteed investment certificate, or maybe we can also speak about the treasury bills because they kind of like work similarly. The GIC, as it's called, is more like an investment that's guaranteed for your capital. So you put your money into the bank, and then it takes a while. You set the target basically. There are different types of GICs depending on the bank you're working on. It takes a while, and then after that time, 1 month, 2 months, 3 months, 6 months, you get your capital and interest. And this is guaranteed because some other investments, your capital is not guaranteed. Sometimes you may make some losses, even if you withdraw early or if you wait to the end of the term of the investment. But GICs, you have your capital guaranteed basically. Treasury bills is kind of like that, so that's why I'm going to speak on two of them. But for a GIC, you're basically giving your money to the bank directly. A treasury bill, you're giving your money to the government. So the government uses your monies for running the economy, solving some problems, and then pays you back with interest. And then for the GICs, you're giving it to the bank directly. The bank will use the money to loan to others, basically, and then give you back your money with interest. Now, the tip or the trick for this video is basically how you can use these tools to kind of like form a fixed income stream. I'll give you an example. So basically, let's say you have $10,000. I know the GIC has like a minimum amount of maybe $500. Even the treasury bill has a minimum amount, maybe $1,000. Let's say you have $10,000, or let's say you have $12,000, and you want to get monies every month. So basically you want to get like some kind of income stream, like a salary. You could go and open a GIC that lasts for 1 month. Basically, you open the GIC in January, that lasts for a month, and then by the end of January, you get your payout. You reopen that GIC as well in February. Same thing, you keep rolling this over. So every month you're getting like a steady stream of income. You could also do it quarterly as well. So you could open, you could kickstart the GIC that's going to pay out quarterly, and then kickstart several GICs depending on how much you have. Same thing with the treasury bills. Treasury bills run for about a month and sometimes up to a year. So let's say you have a large sum of money, let's say $12,000 as well. Not so large, but it's something to work with. You could start in January and then set up a treasury bill for a year, and then by next year, January, you're going to get your $1,000 and interest. So you can do this January, do this in February, March, April, May, you get the picture, and then keep going forward. What happens is you're setting up investments for next year, and then next year you roll them over. So by next year, 2023, what will happen is January, by the end of January, you're going to get $1,000 plus your interest. The interest was $100, so you get $1,100. So your $100 interest, you can take that out as an income. Now, it seems kind of simple. I mean, investing $1,000 would just not give you that much, maybe. But if you kind of use this idea for larger sums of money, maybe $100,000, you can then see the impact. So basically, you can be making from $500 to $1,000 a month. And this is not really real estate, but this is more like a sure way to get fixed income and a guaranteed way to keep your capital stable as well. So this tip, this series, we're going to be discussing this similar idea about how to kind of make your income stream fixed, make your passive income stream your main income stream with these tools. So the GICs or treasury bills, do your own research, find out the one that works for you, find out the tenor that works for you, 1 month, 2 months, 3 months, and then discuss with your bank or discuss with your broker, and then get into it.